The Chief Investment Office believes that U.S. and global equities are attractive. They also believe that now is the time to broaden your equity portfolio. The Great Broadening is a way to expand opportunities geographically, sectorally, and structurally. Do you want to know more? Well, we're going to get into that and a whole lot more right now on UBS Trending. Hi, everyone, and welcome to UBS Trending. I'm Anthony Pastore. Thank you so much for joining us today. I'm very excited to welcome to the studio my guest, Ulrika Hoffman-Burchardi, the Chief Investment Officer here at UBS. Ulrika, welcome to the studio. Thanks for coming and joining and sitting down with me.
A pleasure to be here, Anthony.
So this executive summary, which is entitled The Great Broadening, recently published. You are the key author and editor of this, along with some of the other members of the CIO. But what I love about the report, it really goes into a broad range, globally, domestically, about these kind of updated investment opportunities. Before we get into that, I thought maybe you could give us your take on what the Great Broadening is and why it really matters for investors right now.
Yeah, we made a big pivot in our equity stance at the end of last year. In the prior years, we were very focused on a small set of companies, which we call the AI 7, the enablers of what we now see as this new wave of artificial intelligence, generative AI. This is the 3 chip companies, NVIDIA, Broadcom, Micron, and the 4 hyperscalers. Those were attributable to a lot of appreciation in the S&P 500 in particular. And now we think it's time to broaden out. We think that the leadership in equities is going to stretch across multiple sectors of the economy. And that's for 3 reasons. First of all, we think the global economy is going to rebound because the major economies in the world, the US, China, Germany, and Japan, they're all opening their purse strings. They're spending more, they have large fiscal programs in place, and we think that will re-accelerate economic growth. And that's a tide that lifts all boats, not just a few names in the technology sector. And then secondly, we think the value capture from AI will also broaden out across the economy. We will hear companies in the transportation sector, the industrial sector, the financial sector. We will hear more and more executives talk about productivity gains from AI, increasing revenue and also lowering costs. And then largely we have in the US the midterm elections. And I think the policy playbook of the administration will focus increasingly on the low and middle income consumer. And that again will support broader part of the consumer sector, hence our upgrade of consumer discretionary most recently.
Right, and we often talk about the impact and future impact of the One Big Beautiful Bill Act, and as you mentioned, when monetary policy and fiscal policy are lifting economic activity and the economies of these countries, as you said, those are the tides that lift all of the boats. Yeah. So we talked earlier, you and I, about the fact that you had that Mag 7, AI 7 for the last 2 years really lifting the boats, and some of the smaller names maybe didn't see as much benefit, but that may be shifting at this point.
Yeah, I think and it's a very good point. It's not just fiscal. In the US, we also have monetary policy that's supporting the economy. We've had 3 rate cuts. We think there are going to be 2 more later this year in June and September. But we'll see the impact of those rate cuts over the next few quarters. So it's actually quite rare to have both fiscal and monetary policy working at the same time in a relatively good economic environment. Last time we have seen those 2 policy measures working together was in COVID, of course, much larger in magnitude, and then the great financial crisis. So now we have those 2 forces coming together in a year that we still think is also pretty solid in terms of growth.
Right.
Maybe no surprise that it comes in a year where we also have the midterm elections.
Exactly. We'll get to that in a moment because that's a whole other story in and of itself. But when you think about the overall opportunity for, say, U.S. investors, because as I said, this is a global report. On the U.S. side, where do you see the most kind of opportunity this year versus last year, especially as you're talking about the broadening for the U.S. investor?
Yeah, we upgraded Europe also at the end of last year, Japan as well. Again, because for the first time we're now seeing signs of fiscal stimulus, and we think that will translate into an uptick in economic growth, both in Japan but also in Europe. Of course, Germany is at the forefront. They committed to 500 billion in spend over the next 10 years. That's 10% of their GDP.
Wow.
That is a pretty big pivot from before, where it was all about what they Germans called the black zero, a balanced budget.
Mm.
So that's now, I guess it's a red minus right now with those fiscal spending plans. But that will still help the economy, not just in Germany, but also in Europe, grow more broadly. Hence, we talked about a tide lifting all boats, and we see especially those markets as attractive because they trade at a discount to the markets here in the US. And why do you want to pay for growth, structural growth, if you can get that cyclical growth at a much cheaper valuation?
Right, and we were talking about
Yeah.
valuations. Some of those larger cap names on the U.S. side have 30 times, earnings valuations, and there are some names out there, as you were talking about earlier, that their valuations are a little less expensive, including those overseas. So you can see that there is an impact for what's happening globally to the U.S. investor as well, because there is a relationship there.
There's a relationship there, and emerging markets we think are very attractive as well. Many countries in emerging markets, they trade at single-digit multiples. So again, if we have strong global economic growth, these markets will also get a bit. And again, there's much more upside because the valuations have been so depressed, especially in emerging markets, where we really haven't seen inflows in a very long time.
Right. But what's the takeaway really here? If you're an investor or a viewer that's watching this program with the two of us having this conversation, what are the one or two things that you want them to take away from? And I know this is a very broad conversation, and you can go into much more detail from this report itself. But what are the one or two real takeaways for viewers here as they maybe pick up the phone and talk to their FA or think about their own portfolios?
I think the most important message that we want to share is that now is the time to diversify. The last few years, we were very much on board with keeping compounding concentrated positions. Now we see that there are three factors, and we just talked about them, that no longer make that the optimal strategy. And it's time to think about regional diversification, as you pointed out, also diversification across sectors, and even in the structural opportunities that we're seeing. AI, electrification, longevity. We think you should be exposed to all three, number one. And within those opportunities, we have dynamically already recalibrated and made sure that our exposure, even within those opportunities, is much more diversified. That's why we call it the great broadening, because we see broadening regionally, we see it sectorally, but we also see it inside these innovation opportunities that we think over time will be very accretive to equity portfolios.
Right, and in the report you also point out that CIO has raised its 2026 S&P 500 earnings target by 12%. So obviously the bull run continues, or at least some version of the bull run. Maybe not as much performance as we've seen the last 2 years, but still expectations for growth this year.
Expectations for growth. We do think, though, that there will be pullbacks like there always are, especially with high valuations that we're seeing right now. The risk for pullbacks is higher because risk management needs to be tighter. When you are at now valuations that we are 26, 27 times forward in the S&P 500, that's the top decile of valuations historically. And in those situations, of course, any risk to fundamentals could be a lot more exaggerated than in low valuation environments. So we think there is room for pullback, but we think the uplift will come from sectors that have not seen the limelight in the last few years.
Right, so portfolio diversification is certainly key, especially now in the environment that we're currently in. Ulrika, thank you very much. Great stuff. I know we barely scratched the surface on the report, but I know that over the next few weeks and months, we'll be talking to more of our CIO colleagues about their parts of the great broadening. So thanks for kicking us off today. Good to see you.
Great to see you too.
Thanks very much. Ulrika Hoppen-Brochardi, Chief Investment Officer here at UBS. And for more information on everything coming out of our CIO, make sure you're visiting our Insights website at ubs.com/views. Plus, you can follow UBS on social media. We're on LinkedIn and Facebook. Plus, we have our own dedicated Instagram channel at UBS Trending. Please give us a follow there. There's really great content that you can find on that particular page. And as always, if you have any questions or would like to continue this conversation, make sure you're doing so with your financial advisor. Until next time, I'm Anthony Pastore. We wish you a great rest of your day, and remember to keep your eyes on what's trending. We'll see you soon, everybody.